All right, so are you ready to dive in?
Always ready.
Okay, good. Because today we're looking at whether or not Netflix might be splitting their stock this year in 2025
Hmm. Interesting.
and what that could mean for you and me as either viewers or investors or both.
Right.
And we're basing this whole deep dive on a Motley Fool article
Okay.
from January 27th, so just a couple days ago.
Very recent.
Yeah, titled, "Is a Stock Split on the Way for Netflix in 2025?"
Catchy.
I know, right? But before we get into the article itself,
Sure.
Netflix stock is almost at $1,000 per share.
Wow.
I know that's a lot, even for a company as big as Netflix.
It's true that price per share is certainly grabbing attention.
Yeah, it makes you wonder if this is a sign that a split's coming.
Could be.
But before we jump into predictions,
Okay.
I think it's important to understand why stock splits even matter.
Yeah, that's a good point.
What's the big deal about them?
Well, think of it this way. A stock split doesn't actually change the fundamental value of a company. It's like taking a $100 bill and exchanging it for $10 bills.
Okay.
You still have the same amount of money,
Right.
but it's divided into smaller units.
More manageable units.
Exactly.
Okay, so applying that to Netflix, then a stock split wouldn't mean that the company is suddenly worth more or less.
Exactly.
But it could make the stock more appealing to smaller investors.
Right.
Who might be hesitant to shell out $1,000 for a single share.
Yeah, because who wants to do that?
Exactly.
Much easier to think about in terms of smaller amounts.
It's kind of like the psychology of pricing.
It is.
$999 just feels so much less expensive than $1,000.
It does.
Even though it's basically the same thing.
I know. It's funny how our brains work.
I know.
But yeah, that psychological effect can have a real impact on how investors behave.
So a stock split could then attract more investors, increase the demand for the stock, and maybe even drive the price up in the long run?
That's the general theory, yes.
Yeah. Okay, so let's get into the specifics of why this Motley Fool article thinks Netflix might be considering a split right now.
Okay, let's do it.
They start by highlighting Netflix's incredible performance in 2024.
Well, they have every right to highlight it.
I know.
Netflix added 18.9 million subscribers just in the fourth quarter of 2024 alone.
Wow.
Way more than anyone expected.
Huge.
Yeah, and they now have over 300 million subscribers.
Globally.
Globally, which is more than double Disney+.
It's no wonder that their stock price is so high.
It's true, and the article makes a really good point, I think, that growth is a big reason for all this stock split buzz.
Makes sense.
But there's more to this story than just subscriber numbers.
Oh, is this where we get to the ad-supported tier?
You got it.
Because I remember when everyone thought that was kind of a crazy idea.
I know, it seemed risky.
But it's working really well for them.
It really is.
So tell me more.
Well, in Q4 of 2024, 55% of new signups chose the ad-supported plan.
Wow, that's over half.
It is, and this is a really fascinating insight into what's driving Netflix's growth.
Okay, I'm intrigued. Tell me more.
So essentially, they're attracting a whole new segment of customers.
Okay.
People who maybe wouldn't have subscribed if it weren't for this lower price.
More price-sensitive customers.
Exactly.
So they're not only growing their subscriber base,
right,
but they're also diversifying their revenue streams.
Exactly. And on that point, the article highlights that their ad revenue actually doubled in 2024.
Wow.
And they're expecting it to double again this year.
Really?
Yeah.
That's a lot of money.
It's huge for their profitability.
I'm seeing a pattern here. Netflix is all about adapting and finding new avenues for growth.
I think you're right.
And speaking of new avenues, they're making a big push into live programming now too, right?
They are. Live content seems to be their new frontier.
It's kind of wild to think about watching live NFL games or WWE matches on Netflix.
I know it's a big shift from their original focus on on-demand.
Yeah.
But they seem to be going all in on live.
Yeah, and I think it's a smart move.
Oh, yeah, why?
Because live content creates that sense of urgency and excitement that you just don't get with on-demand.
Totally.
It's like the difference between watching a recorded concert and being there live.
Exactly.
And financially, this is really smart because people are more likely to sit through ads.
Oh, yeah, for sure.
During live events. Which means more ad revenue for Netflix.
Right, more money.
Plus, live events generate so much buzz on social media. It keeps them in the conversation and attracts even more viewers.
I agree. It's a clever strategy.
And the Mike Tyson-Jake Paul fight that they streamed.
Oh, yeah. How did that do?
Became the most streamed live sporting event ever on Netflix.
Wow, that's impressive.
It's a serious milestone.
It is.
It shows that they're serious about making live content a major part of their platform.
Yeah, I think so too.
Okay, so we've talked about subscriber growth.
Right.
ad revenue, and live content.
Uh-huh.
What about Netflix's overall valuation? Well, the article mentions their price-to-earnings ratio, or a PE ratio.
So can you explain what a PE ratio is? Because I think some listeners might not know.
Sure. So basically, a PE ratio is a measure of how much investors are willing to pay
Okay.
for each dollar of the company's earnings.
Okay.
So think of it like this. If a company has a PE ratio of 20,
Okay.
it means investors are willing to pay $20
Okay.
for every $1 of earnings that the company generates.
Gotcha.
So the higher the PE ratio,
Yeah.
the more you are paying for each dollar of earnings.
Okay.
Does that make sense?
Yeah, that makes sense.
Okay, cool.
So back to Netflix, the article mentions that their current PE ratio is 49.6.
Right, which is actually below its 5-year average.
So a lower PE ratio could mean that as investors, we're getting a better deal.
You could interpret it that way. Yeah.
Like we're paying less for each dollar of their earnings.
Potentially, yes.
This is where it gets interesting.
Yeah.
What does it mean for the average person who might be considering investing in Netflix? That's a great question.
Thanks.
Well, if you believe in Netflix's future, which I think their track record speaks for itself,
Yeah, it's pretty good.
the fact that they have a lower PE ratio,
Yeah.
combined with this possibility of a stock split, could make this a really attractive time to invest.
That's helpful context. Thank you.
You're welcome.
Okay, I'm ready to hear the Motley Fool article's actual prediction about the split.
All right, let's hear it.
What do they think is going to happen?
The author believes that based on the current stock price and Netflix's history, a 10-for-1 split sometime in 2025 seems very likely.
A 10-for-1?
Yeah.
Wow, that's significant.
It is, and it's interesting because other major companies have done similar splits recently, like NVIDIA and Broadcom.
So Netflix wouldn't be breaking new ground here.
Right.
But is this a sure thing?
That's where we need to be careful.
Okay.
Because this is just one analyst's opinion, and of course none of us have a crystal ball.
True.
We don't know for sure if or when it'll happen.
Right. It's a good reminder that we shouldn't take any single prediction as like gospel.
Right, exactly.
We should always do our own research.
Of course.
Consider different perspectives.
Yes.
Before making any big investment decisions.
Absolutely.
Especially with a volatile stock like this.
Yeah, for sure.
So speaking of different perspectives,
Okay.
I think it's worth taking a step back and asking a broader question.
Okay, what's that?
What does Netflix's recent performance and all this stock split talk tell us about streaming as a whole?
Oh, that's a really interesting question.
I'm curious to hear your thoughts on that.
Well, to me, it signals that the streaming wars are far from over.
Oh, really?
In fact, I think they might even be heating up.
Interesting, because Netflix is pushing the boundaries and innovating to stay ahead of the curve.
Definitely.
It makes you wonder what other streaming giants are going to do to keep up.
Right. What will Disney and HBO and all the rest do?
Yeah. What's their next move?
Yeah, it's going to be really interesting to see how this plays out.
Yeah. This is just one chapter in a much larger story.
Right.
And I think it's going to be a story filled with twists and turns and unexpected developments.
I agree. And I can't wait to see what happens.
Me too. Well, I think we've covered a lot of ground here in this first part of our deep dive.
We have.
We've explored the rationale behind a potential stock split,
Uh-huh.
delved into Netflix's recent performance,
Yeah.
and even started to consider these broader implications for the streaming industry.
It's a good start.
But this is just the beginning.
Oh, yeah, for sure.
In part 2 of our deep dive, we're going to take an even closer look at their strategies,
Okay.
their strengths,
Yeah.
and the challenges that they face in this crazy landscape.
I'm ready when you are.
Okay, awesome.
Let's do it.
All right. Welcome back to our deep dive into Netflix. Before the break, we were discussing that potential stock split and all that impressive growth they've been seeing. But now I want to dig a little deeper into their strategy.
Okay, sounds good.
They've evolved so much from those early days of DVD by mail.
It's remarkable, isn't it?
Yeah.
They've gone from a disruptor to an industry leader.
And they've never been afraid to shake things up.
No, they haven't.
I mean, think about it. They went all in on streaming when everyone else thought it was too risky.
It was a big gamble at the time.
But they saw the potential of streaming.
And then they doubled down by investing in original content.
Shows like House of Cards and Stranger Things really changed the game.
I agree they were game changers.
They showed that streaming services could produce high-quality content that could, like, rival or even surpass what traditional networks were offering.
And they created a brand that's now synonymous with original must-watch content.
When I hear about a new Netflix show, I'm instantly more intrigued than if it were on like a traditional network.
I think a lot of people feel that way.
Yeah, it's like they've built this reputation for quality and innovation.
Absolutely. And that reputation is so valuable in today's market.
Especially with all the competition.
Right? It helps them attract top talent, get those licensing deals, and most importantly, keep subscribers engaged.
And they've been really strategic about building a global audience.
Oh, yeah, for sure.
They're producing content in so many different languages now.
They are.
And catering to all those different cultural tastes.
They recognized early on that the future of entertainment is global.
So they're not just trying to win over American viewers.
Right. They're aiming for world domination.
World domination?
Kind of.
Well, I guess when you have over 300 million subscribers,
Yeah.
in practically every country, you're well on your way.
It's impressive.
But going global can't be easy.
No, it definitely comes with its own set of challenges.
Like what?
Well, think about censorship laws in certain countries.
Yeah.
Netflix has had to make some tough calls.
About whether to comply with those laws or risk losing access to those markets.
Right. It's a tough balancing act.
It must be.
Trying to adhere to local regulations while also staying true to their brand identity.
And their commitment to creative freedom.
Exactly.
And then you've got the challenge of appealing to such diverse tastes.
Yeah, what resonates with viewers in one country might not work in another.
Right.
It's a constant challenge.
That's why they're investing so much in local language content in different regions.
Yeah, they're trying to create content that feels authentic and relevant.
I've definitely noticed more international shows and movies popping up on my Netflix feed.
Me too.
It seems like a smart strategy, but it also requires a really deep understanding of different cultures.
Right. And a willingness to take risks.
And speaking of risks, we talked earlier about their move into live programming. That feels like a pretty big gamble, too.
It does.
Because they're competing with those established players like ESPN and the traditional networks.
Yeah, who have way more experience with live events.
But I think they're approaching it strategically.
In what way?
They're focusing on events that align with their brand
Okay.
and appeal to their target audience.
So instead of trying to be everything to everyone,
Yeah.
they're carefully choosing events that will resonate with their subscribers.
And attract new ones who have similar interests.
Right. And they're also leveraging their technology to deliver a really smooth experience.
Do you remember that Mike Tyson fight?
I do.
Millions of people watched it live on Netflix.
Without any major problems.
Exactly.
It seems like they can handle it.
They've proven they can handle it.
That's pretty impressive.
So it sounds like their strategy is kind of this combination of bold bets, calculated risks,
Yeah.
and a constant willingness to adapt.
That's a good way to put it.
But let's not forget about the competition.
Right.
Netflix might be the biggest streaming service right now.
Subscribers.
Yeah. But they've got some serious heat from Disney Plus,
Oh, yeah.
HBO Max, Amazon Prime.
Yep. All the others.
The streaming wars are definitely intensifying.
They are.
And Netflix can't afford to get complacent.
No, they need to keep innovating.
Expanding their content library,
Yeah.
finding new ways to engage subscribers.
It's a constant race.
It makes me wonder what their next big move will be.
Well, some analysts think they might get into gaming.
Oh, really?
Yeah, or virtual reality experiences.
That's interesting.
Maybe even live events beyond sports and entertainment.
That would be fascinating to see.
It would.
It feels like the possibilities are endless.
They really are, and that's what makes this industry so exciting to follow.
I'm feeling pretty inspired after analyzing their journey.
Me too?
They've definitely set a high bar
They have.
for innovation and ambition.
They really have.
So, as we wrap up this part of our deep dive,
Okay.
what are the key takeaways that we should leave our listeners with?
Well, I think the biggest one is that Netflix's success isn't just about luck.
Okay.
It's about a constant pursuit of innovation,
Right.
a willingness to embrace change, and a deep understanding of their audience.
They haven't been afraid to push those boundaries
Not at all.
of what a streaming service can be.
Right. They've also shown that it's not enough to just have great content. You need to create a seamless, engaging experience for your subscribers.
Yeah, you have to keep them coming back
Exactly. And you have to constantly evolve.
to stay ahead of the curve.
Right.
It's a powerful reminder that in today's world, complacency can really be a company's downfall.
I agree 100%.
So as we move into the final part of our deep dive,
Okay.
we're going to explore what all of this means for you, the viewer, and the potential investor.
Sounds good.
We'll be right back after a short break to tackle that very question.
All right. Looking forward to it.
Okay, we are back for the final part of our deep dive into Netflix. We've covered so much ground, from their potential stock split to their global expansion and that whole push into live programming.
It's been quite a journey.
Yeah, but now let's shift gears a bit.
Okay.
And talk about what all this means for you, the listener.
Right, because we've analyzed Netflix as a business.
Right.
But it's the viewers and investors that really make it all happen.
Exactly. So let's start with the viewers. What does Netflix's evolution tell us about the future of entertainment?
Well, it's clear that streaming is king.
Yeah.
And that's only going to accelerate. Traditional TV is fading.
Right.
And cable subscriptions are dwindling fast.
It's crazy how much has changed in just a few short years.
It is.
I remember when streaming was this novel concept.
Yeah, just a novelty.
And now it's like completely reshaped how we consume everything.
And it's not just about convenience anymore.
Right.
It's about quality.
Yeah.
Streaming services like Netflix are investing heavily in high-quality content
Yeah.
that rivals and often surpasses what's on traditional TV.
We're seeing some incredible shows, documentaries, movies, stand-up specials.
That's amazing.
And it's all there whenever we want it.
On demand.
Exactly.
That's the beauty of it.
We're not tied to TV schedules anymore.
Right.
Or limited by what's playing in theaters.
We have a library of content from all over the world right at our fingertips.
It's a pretty amazing time to be an entertainment fan, wouldn't you say?
I'd say it's a golden age.
But it comes with its own challenges, too.
It does.
What should viewers keep in mind as they navigate this new world of streaming?
It can be really overwhelming.
Yeah.
Trying to choose what to watch.
I know.
There's just so much content.
It's too much.
And it's easy to just get lost in all the options.
I know. I spend more time scrolling and trying to decide than actually watching anything.
Yeah, that's the paradox of choice.
More options don't necessarily make us happier.
That's right.
So how do we combat that?
I think it's important to be really intentional about what you watch.
Okay.
Don't just passively scroll.
Right.
Think about what you actually want to watch.
Right.
What are you in the mood for?
Right. Like, what are your goals?
Exactly. Don't let the algorithms control you.
Be mindful to make conscious choices.
Right. And be willing to explore.
Okay.
Go beyond the mainstream.
Branch out.
Exactly. Try different genres, foreign films, documentaries. You might be surprised.
It's all about curating your own experience.
Rather than letting it be curated for you.
Yes. Love that. Okay, so we talked about the viewers.
Yeah.
Now what about the investors? Okay.
We analyze Netflix's stock split potential, but what's the bigger takeaway for investors?
I think Netflix's story offers some really valuable lessons.
Like what?
First, it highlights the importance of finding companies that are innovative
Okay.
and adaptable.
So companies that aren't afraid to disrupt the status quo and evolve.
Right, and they've shown a real knack for anticipating consumer trends.
Which is key for any investor.
It is. You can't just look at past performance. You have to consider future potential.
And pay attention to the bigger picture.
Yes. Netflix's success is tied to the rise of streaming and the decline of traditional media.
Understanding those bigger trends is essential for making good investment decisions.
Couldn't agree more. And lastly, I'd say, Netflix shows us how important research is.
Yeah.
Don't just blindly follow the hype or rely on someone else's predictions.
Investing always involves risk.
Always.
So it's crucial to be informed and make decisions that are right for you.
Absolutely well said.
Now, as we wrap up this entire deep dive, I want to leave everyone with a final thought. Okay, I'm listening.
We've talked about the evolution of entertainment, the challenges of all this choice, and the importance of being informed. But there's a bigger question here.
What's that?
What role do you want entertainment to play in your life?
That's a good one.
In this age of endless content, it's easy to lose sight of why we consume it in the first place.
It's true.
Is it for escapism, relaxation, connection, education?
Right. All of the above.
I think it's worth thinking about those motivations.
Definitely.
Are you using entertainment or is it using you?
That's deep.
We should be mindful of how it affects our time, our attention, our values.
I completely agree. So as we conclude this deep dive, we encourage you to think critically.
Explore intentionally.
And choose wisely.
The power to shape your entertainment experience is in your hands.
That's a great way to put it.
Thank you for joining us on this journey.
It's been fun.
And until next time, keep diving deep.